Welcome, welcome, welcome. My name is Kiki Levy, and I am the Administrative Specialist here at Temple Small Business Development Center. Here at Temple SBDC, we help businesses start and grow. We provide a series of low to no cost webinars, as well as offer one-on-one counseling service at no cost to you. Today, you have joined us for our QuickBooks series, Bookkeeping 101. A copy of today's PowerPoint, along with other materials, will be sent to you all within 3 to 5 business days after the event. Just to let everyone know, you have been muted, but we do encourage you to post any questions that you may have in the Q&A. Please refrain from posting questions in the chat. That way, we can keep track of them and Connie can address your questions as they come in. At this time, I will turn the floor over to Mrs. Connie Mitchell, owner of Mitchell Business Services. She has been a certified QuickBooks Pro advisor for over 20 years, and we look forward to all the information that she's going to share with us today. Connie, take it away.
Thank you, Kiki. I am thrilled for this opportunity to help inspire people to learn about bookkeeping and the 3 most important financial statements that can help you understand your accounting for your business. The accounting is the language of business. So I'm hoping that what I present today will help you understand what those reports are and how they can be critical information for you in managing your business. Little bit about me that Kiki talked about already. I started my business in 2001 after working 20 years as an employee for other employers, larger size businesses. And in 2000, due to advancements in technology, I decided I had a choice whether to find 10 part-time jobs, because really small businesses didn't need to hire a full-time bookkeeper anymore, or start a business and find 10 clients. So that's what I've done in the past 20 years, is just finding 1 client at a time, and some of them turn into a regular monthly client. And now I'm at the kind of end of my career, and I'm thrilled to teach other people what I've learned, and help business owners understand their finances, help bookkeepers understand that this is a viable home-based business. If I've done it, you can do it. And so that's pretty much what I've been doing and what I'm still doing. Financial reports are really the pulse beat of the financial health of your business. So like I said, the accounting and the bookkeeping are the language of business. So you need to understand these reports in order to understand how your business is doing. Once you understand that your reports are first accurate and timely, then you can utilize that information and make better business decisions. So you're setting goals for where you want to be 5, 10, 15 years from now. And then you're looking at these reports every month, every quarter, every year, every 5 years, and comparing where you are, where you've been, and where you want to go, and making sure that you're on track. So today's objectives is understanding the balance sheet, understanding your profit and loss report, your cash flow report, how that cash comes in and leaves that business. It's a cycle, but you need to understand how and when that money is going to be available. As you've heard before, I'm sure cash is king. So if you run out of cash, your business does stop. So it's imperative not to run out of cash. So it's another reason to keep an eye on some of the key points in these reports. Identify and follow up with slow paying clients using your accounts receivable report, and identify and prioritize bills that are due and listed on your accounts payable report. So this first report that I referred to is called the balance sheet. So this one side of the report is a listing of all your assets. So your assets are going to include all your cash accounts, your accounts receivable, the monies that you've extended credit to your customers, that's a receivable balance, and that's an asset to your business. Your inventory, anything you have sitting on the shelves that you're going to sell, the land, if you have buildings, all of those are listed on one side of the balance sheet. The offset of the balance sheet that totals to the same dollar amount is the liabilities, which is all of your accounts payable, those monies that you owe out, and loans that you owe to the bank. And then the equity portion, which is your investment in the business, your retained earnings, so prior periods profits that you've kept in the business, and then this current period's net income. So that is the other side of that balance sheet, that liabilities plus your equity equals your assets. There's financial analysts that look at reports like this. Businesses report the status of their business on a regular basis. This is how decisions are made in investments, whether or not to buy stocks in a business. So the balance sheet is the report that is a snapshot of a business at a particular point in time since the beginning. So it's not just a profit and loss report. It's the balance sheet since the beginning of time. And here's a little example of the balance sheet where it's listing these assets on one side, and the other side it's not showing on this report, unfortunately, but it would be the listing of the accounts payable and the equity portion of this balance sheet, and it would come up to that same total number. So that's why it's called a balance sheet, where it's balancing the assets which are equaling your liabilities plus your equity. There's ratios to measure the health of your business. You know, when you're going for a loan, a bank will look at that debt versus equity ratio, making sure that you haven't overextended the business assets by borrowing against them. So there's lots of ways to look at these numbers. But the very first part is the bookkeeping. It's number one, making sure it's accurate. And the way numbers are kept accurate is it's a process called reconciling. So you're going to, every item on a balance sheet will reconcile to some other outside source. So your checking accounts will reconcile to what the bank says, and your inventory will reconcile to some kind of physical hand count. Your building will reconcile to the actual building. And again, on the other side, the loans will reconcile to whoever you've borrowed the money from, and the equity section. So each account can reconcile to something outside the business. The other report is called the profit and loss statement. So it's for a particular period of time. It's going to represent, say, 1 year's worth of revenue and 1 year's worth of expenses. And then the difference between that revenue coming in from your sales and the expenses, so whatever you had to spend in the business in order to generate those revenues, that difference is called a net profit. And then that report becomes what your taxes are based on. So on an annual basis, whoever prepares your taxes, I always recommend using a CPA. They have higher skills and they have the credentials to make sure that your taxes are being prepared correctly, and that you're getting the advice you need to structure your business correctly. But that profit and loss report is one point in time, one span of time. So you can even look at it at a 6-month period and say, This is the revenue and the expenses for a particular period of time, as compared to the balance sheet where it's since the beginning of time of the business. And then here's a sample profit and loss report where it's showing all the different income categories. So as you're invoicing your clients for particular services or products, you can keep track of that income by category, and as well as your expenses. You're gonna list your different expenses on this profit and loss report, and then come down to this bottom line, this net income. In QuickBooks, one of the favorite ways that I like to look at this report is you can go up to the top if we're actually in the QuickBooks program and customize it, and you can spread this out for the whole year and have columns running for January, February, March, April, May, so 12 months. And then as you look across, you can see trends, and so you can see if a particular income category is going up or going down, and you can focus on what's going right or what's going wrong based on the direction of those numbers. And also with these expenses, if the report is spread out in columns by month, you can easily find, or more easily find, maybe something that's been categorized into the wrong place, and so you can find it and correct it. One of the things I say about bookkeeping is that it begins with the letters BOO for boo-boos. Bookkeeping is finding and fixing boo-boos all the time. It's a lot of my life is really working on the accuracy of books, and just mistakes are made all the time. So looking at these reports and drilling down into the details and making sure that they're correct and then they're accurate before you actually use them to make decisions or hand them off to somebody who's going to be making decisions about a business. So that's the profit and loss. And then we have the statement of cash flows. This is one of the most confusing reports. It kind of ties the balance sheet and the profit and loss together, and it focuses on the actual cash balance. So cash can come into your business. First, you start with a particular cash balance. Excuse me. Then you add to that cash by either making sales or borrowing money or collecting on accounts receivable on sales that you've made on credit. Your cash flows out of the business as you pay expenses. You take money out for yourself. You're paying payroll, you're paying taxes, and maybe you've borrowed money. So sometimes the cash is gonna be showing on the profit and loss. Sometimes the cash is going to be showing on the balance sheet. And sometimes what you need is a kind of a blend of both reports where, the profit and loss might show you've made all this money, but then that money's not actually in your bank account. So you go back to this cash flow report and find out, where things are going. Excuse me. So that's a statement of cash flows. And then this is an example of how a cash flow report is structured. And they're, all these reports are done the same way across all kinds of businesses so that they can be read. Like I said, it's the language of business. So you have to get familiar with these reports, just like you're getting familiar with a new language. It's a matter of repetition, getting yourself in a habit of looking at these reports monthly. And some bookkeepers and accountants and business owners have just a regular routine where you're looking at something every day, even if it's only 5 minutes, just pick something and then cycle it. Look at your balance sheet, then look at your income statement, then look at your cash flow, then look at your accounts payable, then look at your accounts receivable, then look at a budget. That's not one of these reports that are listed here, but it's something that is part of what I recommend people do, is setting up a budget so that you can compare, this is what your goal was or your budget number was, this is what your actual was, and then you can get a report very easily in QuickBooks where it's going to show you the difference, that variance, that budget versus the actual. So then you can manage by that variance. It's like, why was it higher or lower than what you anticipated? So it helps to initiate a deeper kind of conversation about your business, rather than just kind of blindly looking at numbers and feeling intuitively about your number. You can look at your number and compare it to something else. You can compare it on a percentage basis. Here we are in the middle of the year. So if you're looking at a budget versus actual, and your budgets are for the whole year, maybe these numbers are showing up, 50% at, mid-year, maybe it's 75%, and you want to look a little closer. Why have you already spent 75% of something you've budgeted, and it's only the middle of the year? So your accounts receivable report, there's an aging report in QuickBooks that will list all of your customers and the amount of money they owe you. It's divided in columns, 30, 60, 90 days. You want to utilize this report to stay on top of those customers that owe you money. You never know. You pick up the phone and you call and you say, is there information that you need that we can give you to help you approve this bill? Why hasn't it been processed? Try to answer the questions and make sure that process and that workflow is smooth and easy for your customer to be able to pay you. They've got their internal workings, and so when they receive your invoice, that you want to make sure that they've got all the information that they need to approve that payment and then send you your money. So this is an example of what that report looks like. This accounts receivable aging summary, where your customers are listed on the left, their current amount, their 30, 60, 90 days, and then the total amount due. This total accounts receivable figure will be a number that's listed as an asset on your balance sheet. Likewise, the accounts payable report is a report that you can list of the monies that you owe to your vendors and to your suppliers. And again, you want to have your own internal processes so that you're able to receive an invoice. You want to be able to, I'll tell you a little story. One of my first jobs was in a construction company, and my job was to open the bills, process a little voucher that went to ADP. They printed out the checks. We got the checks. There was carbon copies. I separated them, copied or attached them to the copies of the checks, mailed out the checks to the vendor, and then filed our copies alphabetically. And my dad was a project manager, and I had gone home one day and said, oh, guess what? I processed a bill for one of your jobs for standard electric time, $17,000. He says, oh, well, why did you do that? I said, well, that's my job. I opened the bills, I prepared the voucher, sent it out, got the check, matched it up, put it in the envelope, mailed it out. He said, well, we didn't get the cameras. So that's when I decided to start going to school at night. And I went to Goldie Beacom, and it was a hobby for a long time to get my accounting degree. It took a long time, but I finally got it. A proud moment in my life to get my accounting degree. But it's where I learned all about, matching an invoice to a packing list and to a purchase order, and making sure that what you ordered was received and that what you were billed for that item, it was the correct amount of money. So there's workflows and there's processes. And back in the day, it was all papers and files and A through Z's. Now that process is a lot of it's digital, it's automated, and some of these approval processes I'm a little concerned about. So just a little heads up, make sure within your own business that as you turn over your bookkeeping and your processes of, you know, spending your business money on stuff, that those approvals processes are in place, your workflows are in place. Another thing I say all the time is not to trust people, but to put your trust in your systems, in your processes, in your workflows, and work to continuously improve that process and system that you have in place. Mistakes are going to happen. You want, again, it's called a boo-boo. You find them and you fix them. Looking up here, I see I have a Q&A. I'll click on it. For travel agencies, would the suppliers be the clients? And how would you record them, accrual or cash? They pay 3 or 6 months from the time the passenger travels. So for a supplier, to me, supplier means that's a vendor, so that's an accounts payable. So, and whether you record things as accrual or cash, in QuickBooks, it's very simple. It's when you look at a report, it's a button, whether you want it to be an accrual report or a cash basis report. So the most accurate reports are usually based on the accrual basis. So you're recognizing those the income when you invoice it, not necessarily when you receive the payment on that invoice. So that's kind of the difference between accrual and cash. So an accrual basis, you wouldn't have an accounts receivable or an accounts payable. The cash basis is you're just recognizing that income or expense when you actually spend the money or when you actually receive the money. They pay 3 or 6 months from the time the passenger travels. So I'm not real sure on that. I'm assuming they're paying in advance, so that would be taking a deposit in advance on a customer if they're going to be traveling, 3 to 6 months out. And that when you take a deposit in advance, you're not recognizing that income. It's actually a liability on your balance sheet because you still owe that customer those monies until you earn it. Passengers' monies are paid directly to the supplier. So I'm not completely familiar with how that process works. Sorry. So I'm going to jump back over to the slideshow. The accounts payable summary. Again, this is very much similar to the accounts receivable report where the A through Z, the listing of the vendors or your suppliers are listed on the left, the current amount, 30, 60, 90, how old these invoices are that you owe. That's the end of the PowerPoint. If you would like more support, I'm available to help. There's a Calendly link. I've email, phone call. I can stop screen share and talk directly to you. I don't know if you have more questions. I have a bookkeeping 101 handout that I wrote up when I really first started my business. And it's very similar to everything I just talked about. The accounts payable, describing the term, it means paying your vendors. Accounts receivable is all about invoicing your customers. Payroll is paying your employees. profits are the reason you're in business. A balance sheet, the principal equation on a balance sheet is that assets minus liabilities equals equity. So it's that same formula, same equation where the assets equal liabilities plus equity. So it's really a mathematical type, formula there. Equity equals your retained earnings. So retained earnings are prior periods profits that you've left in that business and current period net income. Budgets, we talked about predicting future sales and expenses and being able to compare them to actuals. A variance analysis is an important part of the whole bookkeeping process in making sure that your business is on track. Again, cash flow is monitoring that cash availability, so you're able to pay your bills on time. Another analogy I like to use in cash in general in a business is that it's pretty much like the water in a pool, and that you have to have some water in that pool before you dive in. And so before you jump into a business, you want to make sure you have some cash as an operating amount of money, just because you're going to have to spend some money before you get some money. So that working capital is an amount of money that will vary as your business grows. Okay, I've got some questions coming up here. Could you go over how to create and keep track of invoices in QuickBooks? Yes, as a matter of fact, I can go into a sample company in QuickBooks, and I will do that. Let me jump through these other questions. How do we get your handout? This one that I was just looking at, I can scan this and send it in to the Small Business Development Center. So you have a copy of this Bookkeeping 101. They already do have the PowerPoint slides, so that is available. Other things that I have listed on here about ratios is comparing numbers to understand the health of your business. Ratios are also available industry specific. You can go online and see how those balance sheet numbers compare to each other as compared to other businesses that are like what you're in business doing. So you can get a comparison about ratios and benchmark ratios. And I talked about processes, procedures, and policies. Any good bookkeeping system must rely on management's guidance, not to trust the people, but to trust your processes, procedures, and policies. And when mistakes are made, learn and improve the process and the procedure and the policy as required. Hiring the right people to do the right job, but also making sure you have separation of duties so that you don't have just one person doing everything. It's a little bit like putting the kid in the candy store. If you give one person too much access to everything bookkeeping money-wise in your business, it's a red flag. It's a warning. I'm telling you, I've seen too much in the way of fraud and people just not being honest. So you want to make sure that you limit that opportunity. Okay, Sue, I see your question here. You haven't bought the program yet. Do you recommend a certain version online versus offline use? Yes, I highly recommend the QuickBooks Online Plus at the minimum, because it's the version that has the budget. There's essentials, there's simple start, there's lesser versions, but they don't have the budget. And to me, having that budget is a key feature in your bookkeeping program. So having the online version gives you no worries. You don't have to worry about your hardware and your software. It's as long as you can get on a browser, you can sign in and have access to your business bookkeeping, and then you can give limited access to other people to be able to help you. So I'm a big fan of the online. Melissa's asking, can I go over to how to create the cash flow reports? Any suggestions on how to maintain positive cash flow? Excuse me. In QuickBooks, and I'll show you, I'll jump into QuickBooks. There's a report section. So it's just a matter of clicking on the report that you want to see. You can click on balance sheet, you can click on profit and loss, you can click on cash flow. And on the profit and loss and on cash flow, you could determine which period of time. So you can set a beginning and ending on that cash flow report. How do you determine the depreciation schedule for an asset? That's an excellent question. Depreciation is an expense. So if you buy, say, a building and it's, you know, a certain amount of money, it's listed as an asset on your balance sheet. Over time, according to depreciation schedules that are in place for the life of the different assets, you can take an expense, so you can reduce your tax burden. Like I said, that profit and loss report is going to show your sales, income, and revenue, less your expenses, what you're spending on your business to get to that net profit. Typically, when you're buying an asset, that's on your balance sheet, so it's not part of your profit and loss. But an expense for the depreciation is something that you can take advantage of. Can I get QuickBooks trial to practice? Yes, there's a 30-day free trial. You can Google QuickBooks free trial, and there's 30 days free. There's tons of videos on YouTube how to do QuickBooks. There's a lot of pitfalls when you very first start and set up a company in QuickBooks that with a little bit of help from somebody who's experienced. I always recommend you get a CPA that is familiar with the accounting software that you're using, so they can help you set up your business correctly. But if I see a lot of more questions in the Q&A here. How do credit card usage get shown, both when used to purchase materials and when the credit card is paid? It's another excellent question. The credit card balance is going to show up on your balance sheet as a liability. So that would be what you owe the credit card company. As you make purchases with your credit card, it's being entered as a credit card expense. So you're debiting your expenses for those credit card purchases, and then it's being accumulated in that credit card liability account. When you actually then turn around and make a payment to that credit card, you're reducing that liability and then reducing cash. So and it's very simple to set up in QuickBooks. There's banking features that can automatically sync between your bank and your credit card, so that those transactions can come in, and it's kind of half automatic. It'll show the date and the dollar amount, but the automation within QuickBooks and the bank doesn't always capture who you are paying and why you are making that payment. So there's a process in categorizing things that then you can set a rule, so then that automation gets better over time. Do you recommend QuickBooks over the online software like Freshbooks or Xero? I personally have only had experience with the QuickBooks online, and it hasn't been my choice. It's been my client's choice. QuickBooks has an 85% market share. and they are being challenged. I've heard great things about Freshbooks and Xero as alternatives, and it's good that, you know, QuickBooks is getting some competition, because that's going to make QuickBooks a better product. But I'm a QuickBooks girl. Again, Freshbooks or Wave, apologies for the broken up question. That's okay. Freshbooks, Wave, I know other people are using those products and they're happy. As with anything else, you want to make sure that you're aware of what your needs are, and then whatever product you sign up for has those capabilities. So if you're a smaller business and you don't need all of the bells and whistles that are available in QuickBooks, then I would suggest taking a look at the Freshbooks and Waves. I understand that there is money to be saved if you don't need everything that QuickBooks offers. So let me jump back in and share my screen again and show you QuickBooks. So if I click on Craig's design here, who can share? Let me sign back in. Move the questions out of my way. So I'm in a sample company, and on this left-hand side is where you navigate through QuickBooks and do all the different things that you want to do within QuickBooks. This new is where you would go if you're going to put in a new invoice or a new expense, run a payroll, and anything that's like a new task is what that new button is for. And this reports tab is where, oops, let's sign in again. Let me get back to the sample company. Okay, so this reports tab is where the balance sheet, the profit and loss, the statement of cash flows. It's that easy just to kind of click on it, and the report will come up. I can slide up, and then I can customize up here, and I can change the period of time. I can change whether I want to show totals or by month. We can go back to this profit and loss report where I was talking about how I like to see it is showing it by month. And again, this is just a sample company, so there's limited data that's in here. But even on this, you can see, you know, if you're looking at income and you're looking, okay, May and April, there was a big difference. So, you know, it's just interesting to be able to look at your own numbers and spread it out over time to help understand whether you know, your numbers are accurate or not. I mean, this looks odd to me, you know, only showing a rent payment in 1 month. So in a regular business, you would see that rent over and over and over again, probably the same amount each month. And again, the bottom line, whether or not the business is you know, creating a profit, is ideally the, you know, what you want to keep your eyes on here. Oh, we got lots of questions in chat. Do I have a register for 616 and 630? I do want it to, oh, yes, there, I think each class is a separate registration, so it will be a separate Zoom link. So yeah, I would assume that.
Hey, Connie, I actually posted the links up in the chat, and I made Jessica aware that she would need to answer, well, she would have to register for both the class on the 16th and the 30th. It looks like there are 6 other questions in the Q&A if you want to, I can read those off to you if you would like.
Okay, let me scroll to the top of these. Thank you. Anonymous attendee, can you talk a bit about the typical process in bookkeeping? What would be my steps from start to finish? Excellent question. I'm a creature of habit, and so the first thing I want to do when I walk into an office is look at the piles of work that need to be done. You know, invoicing customers are usually a priority. You want to invoice customers so that money is going to be coming in. You want to enter in all the accounts payable so that you know what you owe. You want to continuously work on the accuracy. So every month I'm getting a bank statement for each bank account and then reconciling them. There's an actual process within QuickBooks where you reconcile and you make sure that every single line item on that bank statement is also entered in your QuickBooks so that you're reconciling between your books balance and your bank balance. Let's see, can you go over how to set up a service business in QuickBooks and how the chart of accounts works? So in this gear icon, let me get this question answer out of the way. There's a chart of accounts. Did I click on that right? See your chart of accounts. Okay, so for every single account or category, there's a type that's associated with it, and that type is actually determining which report it's going to be on. So if it's an asset, a liability, or an equity, then it's going to show up on that balance sheet report. If it's an income or expense, then it's going to show up on that profit and loss report. So a service business, when you want to start a new company, there's like templates, sample chart of accounts. Well, there's different service businesses that you can choose from. So Intuit QuickBooks will help generalize what kind of starting chart of accounts you would need to set up and start your business. But nothing's locked. You can always go back in and add things or delete things. It's a very, very flexible program. Let me jump back into the reports and show you a little bit more about what's available. These balance sheets and profit and loss, there's all different ways to look at those. Again, with the accounts receivable, there's a lot of different ways to look at your accounts receivable. You can create statements to send to your customers. In creating an invoice, I'll show you real quick. If I wanted to go in and click on an invoice, it's going to come up as, okay. Again, I'm in this sample company. So I'm gonna want to send it right out of QuickBooks. And how do you want to get paid? Let's say I just want to get a check. So there's all kinds of ways to get paid, and QuickBooks has you can accept credit cards, you can accept ACH, but I really just wanted to show you this template that comes up where you can select here with a drop down arrow any of your customers that you've already previously set up in QuickBooks. If it's a new customer, it'll say, do you want to set it up now? And then you can add the details now. So previously this customer was set up with an email address. You put in the invoice date, when it's due. You can select the product or service So say you're in a gardening business and you want to send the invoice for the weekly gardening service, and you're charging, say, $200, save and send. It'll actually send an invoice via email to your customer. So it's very, very easy to use. Once it's set up, I mean, I'm not gonna lie, it can be confusing, and I highly recommend getting a little bit of help if you're not completely comfortable. You don't want to guess your way through setting up a new company. There are common errors. I'll tell you real quick. Common errors. There's two ways to receive money from a customer. You can do a sales receipt, which means you're going to receive the money and create the sale at the same time, and that's a sales receipt, or a two-part, where the first thing you do is create the invoice and then you receive payment against that invoice. Then those payments are going to then need to be deposited. So there's a little bit of tricky steps that if you don't completely understand the difference between a sales receipt and an invoice, you can get yourself in a little bit of trouble. Same thing with vendors. You can quickly just write a check and use that as a means to pay a vendor, or you can use that accounts payable process and actually enter a bill, then pay a bill. So I call this a two-step process, to enter a bill, then pay a bill, as compared to just writing a check, which is a one-step process. So that's a little bit of the technical aspect of the bookkeeping, kind of behind the scenes. Getting close to the end, and I don't want to miss the opportunity to say the debits and the credits behind the scenes of QuickBooks. That's what's so cool about QuickBooks, that all of these templates that are going to come up, this like a check is going to just look just like a check that's from your check register, and it's creating those debits and credits, those bookkeeping transactions behind the scenes. So that's what's been automated. That's how the engine is working, so to speak, where you don't really care about how the engine is working in a car. All you want to do is get in the car and turn the key and go. So that's what QuickBooks is doing. The engine behind the scenes is the debits and the credits, debiting all these accounts and crediting all these accounts, so that all these financial transactions that are running and flowing through your business are then appearing on a report that makes sense at any point in time, to run your business better and for other people to understand the value of your business. But those debits and credits are the traditional bookkeeping. But the results of all that are the reports. And that's why when I wanted to do Bookkeeping 101, I really wanted to focus on those three main reports, because it's the results of all the bookkeeping. And if you're going to then turn your books over to a CPA to prepare your taxes at the end of the year, one of the things that those accountants are looking for is an accurate set of books. Management is responsible for providing accurate books to an accountant at the end of the year. So the time and the money that you invest in your bookkeeping is going to save your accountant money and time at the end of the year. If you're saving your accountant money and time at the end of the year, then you're saving yourself or saving your business time, because if it's not right, then the accountant's going to have to spend their time fixing it, and they're going to be at a much higher rate than a bookkeeper. I always compare the bookkeeper and the accountant like the nurse and the doctor, and the bookkeeper is doing the everyday, the daily, weekly, monthly, making sure everything's right, timely, and accurate, so these reports are right. And then the accountant is more higher level thinking, more tax planning, tax preparation. There's lots of higher level opportunities for an accountant to help a business and make sure you're running in the most profitable way. So I recommend those services. We jump back there. There's 5 more in the Q&A. What's the difference between Premier and the nonprofit? We are a nonprofit and we just did purchase the Premier nonprofit. What will that do for us? There's a lot of difference in accounting for a nonprofit. I hope you went through TechSoup. I just recently found out about TechSoup after all these years. They sell the nonprofit version to nonprofit organizations at a greatly reduced price than buying it directly through Intuit. So if you don't have that cost savings, turn around and see if you can go through TechSoup and get the cost savings for a nonprofit. A nonprofit is going to have something called restricted funds a lot of times, where people are making a donation to a nonprofit and they want it spent on a particular program. So how that's tracked and how that's reported is a little different in the nonprofit world. Difference between QuickBooks and Quicken, it's a great question. Quicken is more for personal. It's a cash basis. It's only given the ins and outs of the money. It's not a true double entry bookkeeping program. But I've also heard that Quicken has a business version. So there may be more to Quicken than what it used to be. It used to be Quicken was for personal and QuickBooks was for business. That was the general rule. Could you please give your contact information again? I'd be happy to. That's on that slideshow. And okay, so there's my email and there's my phone number. And the website is www.mbsde.com. If you go to the website, there's a contact page, so it will just generate an email to me. Once all transactions are imported in QuickBooks and properly categorized, these reports are automatically populated. Yeah, that's the cool part about QuickBooks. These reports are the benefit of all this work. And so, finding and selecting which report has most meaning to you and to your business is kind of your goal. So yeah, that's the cool part of QuickBooks is the reports. Is there a version of QuickBooks you would recommend for a startup, such as Simple, Pro, or Plus? Again, I recommend Plus because it's the lesser of all the programs that at least has a budget. And I just highly recommend putting those budgets in there, so then you can run the report budget versus actual to get those variances. Budgets are goals. Goals are, the difference between a goal and a dream is that a goal was written down, and being able to just being able to look at your business numbers from less than in an intuitive way, to be able to look at your numbers in a more meaningful way. Doing that by comparing to a budget is how to do that. And also being able to hold someone else accountable. If you're looking at a budget versus an actual, and then you're in a meeting with somebody else that's helping you manage maybe part of the operations, you can ask, why didn't we make our budget? And so that will help drill down to, the specifics behind the scene, what happened unexpectedly, or, that was a positive or a negative. I mean, the numbers can go, either way, but the reason behind that is that's what you're getting to, so that you have the information that you need to zig and zag and adjust and react to what's happening in your business as it's showing up in those numbers. It's been a pleasure. I'm aware that there's also private office hours. I don't know how many we've got signed up for that.
Well, Connie, that was wonderful information that you provided today. So helpful. You saw the questions that came in. People, they are truly, truly, truly interested in QuickBooks. So we thank you for being here today. To everyone that has participated in this webinar, as Connie just stated, we will have office hours immediately following this. I posted the link that you could use to join us. So if you have any other additional questions, feel free to hop on those office hours. Connie will be there and she'll be able to answer any other questions that you may have in regards to QuickBooks. I also posted a link to a 1-minute survey in the chat. Please let us know how we're doing. Tell us how you enjoyed this webinar today. In order for our funders to continue to fund us, they want to know how we're doing. They want to know if you're learning anything from these webinars. So please make sure you take that 1-minute survey. And Connie, I believe you're doing the next 2 sessions as well, on the 16th and the 30th, right?
That's correct. That's correct. It's a series, the Bookkeeping 101, the QuickBooks Beginner, and the QuickBooks Advanced.
All right, so she's coming back. So we got 2 more parts to this series. So make sure you register. If you register for today's webinar, you will also need to register for QuickBooks for Beginners on the 16th, as well as QuickBooks Advanced on the 30th. So please make sure you grab those links out the chat, get registered, and we will see you over in the office hours. Any last minute words, Connie?
Yeah, it's repeating too. We're doing the series again in July and in September. So if once isn't enough, we can do it again.
All right. Well, we'll see you guys in the virtual office hours at 3 p.m. Okay. Thank you, Connie. See you in a bit.
You're welcome. Thank you.
You're welcome. Bye, everyone.